Go through, we don't know.
You folks need them or want them or what do you think on that?
ask for approval of the minutes from our March 2022 meeting. Did everyone get the minutes?
Motion.
In the revised minutes from the thank you, and seconded by Red. Any other additions, comments? All those in favor say aye.
Aye.
Opposed? Motion carries. Thank you very much. So, today we have John Rinklewitz. Is here from, I never can remember his Mango, Metzger, and Bar to review our 2022. So, and apparently there's a 2 or 3 page highlight that should have been given to you. And then there's a very detailed, almost 30 or less 30, of the detail behind the basic financial statement. So we can discuss as many issues as we have 30 minutes. Okay. So John, it's all yours.
Great, well, thank you. Yes, so my name's John Rinkowitz, and I was the principal on the engagement, so led managed the day-to-day on the audit. And again, the audit once again this year went very smoothly. The team you have here does a great job. Anna's team here does a great job of meeting our requests, and the folks at Bonadio do a very good job as well. Meeting our requests, getting us in here, getting us the documentation we asked for, and everything went very smoothly again this year. So just to say thanks to them. So you have a couple of reports in front of you, or you should have received the basic financial statements. So that's that 30-page document of statements and footnotes and things like that. Also a letter of communication, which is a required communication based on our auditing standards, which just walks you through some of the elements of the audit. To talk about the financial statements, we have an unqualified opinion, so we've issued an opinion on the statements. Unqualified, so that's what you're looking for, so no material variances or anything like that that we felt needed to be communicated. Also in the back of the report, because you receive an audit based on governmental auditing standards, we provide an opinion on internal controls in compliance with laws and contracts, and that report has no material weaknesses or significant deficiencies, so a clean opinion on that as well. Very good.
I would just add that, the fact that there were no material weaknesses found, no material adjustments. We followed all accepted general accounting principles. We were under the understanding that staff was available to you whenever you need them. So, no internal control issues, no even minor adjustments that we should be aware of.
No, nothing that
Other
really
than
needs to be.
timing related.
Oh, timing related?
Other than.
Okay. We are waiting for, I think, bond information on the report, but that's kind of typical, unfortunately, just timing of getting that information back. So there is one footnote that still has a couple blanks in it. We're just waiting for a little bit of additional information. That will not change the results of the audit or any of the numbers that are being presented for today. Okay?
Excuse me, I'm just an observance here. On your second page of the summarized statement, assets, and the draft that I'm looking at, how come the numbers don't match? I see a differential of $50 on the total of 2022 to what's listed, and I see a variance of $50 for both the 9 million and the 15 million. They don't match.
This is.
Oh, you're on page 2 when you say 9
Page
million.
16 and page 2.
So you're looking at our finance committee packet? Or are you looking at
Basic financial statements, County Monroe, draft, updated draft,
Which,
which was the first packet.
You looking?
Page 16, where it says cash.
okay, so those are in the footnotes? Okay. So,
That's in
It's
the
de
full
minimis,
audit
it's de
document.
minimis, but the numbers aren't matching from the summarized statement, net position, to the balance. Help me better understand if I'm missing something, I guess.
So you're looking at the actual audit
2022,
document itself.
$15,316,510.
so that's,
$15,316,560.
yeah, so that's the bank balance. So if you take a look at all the bank statements that you have, that's the amount the bank says you have. The $50 is petty cash. So on your books, so the amount that's on your books and on the balance sheet is going to be this carrying amount number, and that includes petty cash.
Petty cash is you, Robin, controlling the petty cash?
Allison.
Allison controls petty cash, okay.
Okay?
Okay, and just
We
to be.
have to watch her.
No, I just,
$50.
looking at numbers, I just wanna make sure if we got a draft, we can fix whatever.
It's funny you say that,
Well,
'cause I do
Mexico.
think like each year we have that, that's a comment,
Mm-hmm.
right? About, hey, this says it doesn't match the balance
Right,
sheet. I
just
think
to
that's-
cover.
yes, that-
And to understand better on page 16 where it does say cash, at December 31st, 2022 and 2021, COMIDA's cash was covered by FDIC. Does that mean fully covered by FDIC? And if so, explain to me how, at 15 million.
So FDIC or eligible securities held in COMIDA's name. So the collateral, which is the bottom schedule down here, is going to be the amounts that are held in FDIC insurance, and then the amounts that the banks that you deposit with have provided pledged collateral, so typically U.S. Treasuries or Treasury notes that they hold and own that are in your name, or for you in case they go insolvent or go under. How often does that happen?
Well,
Read the
so
news.
50,
Right.
Always
but be
a
careful what we say, you know,
Right, right, yeah,
be careful what we say.
Yeah, exactly.
So, my understanding is that 15 million is under one entity, and at the same time covered by FDIC insurance. That's confusing to me. I guess I need to be educated on better how that happens.
It's a combination, right, of FDIC and what's collateralized by the bank.
In a checking account.
Any deposits
Any
you
deposit.
have with the bank checking
Yeah.
savings, anything that
Most of it's in the checking account.
Yes, as of 12/31.
Very confusing how that could be FDIC covered in full, I guess. If I was to better be a fiduciary, I would need to understand how the COMIDA's cash in a checking account was covered by FDIC insurance. Fully covered is what I need to understand, not just covered, because this is where I'm confused in FDIC, as we all know.
The finance committee met on February 28th, and we talked about the checking account balance.
Mhm.
And we are right now in process of moving the funds with approval. Lisa's our treasurer, so we would be seeking Lisa's sign off on any migration of those funds from our checking into our savings.
Being that this is a draft,
And
I
this
want to
is
better
2022,
Right, and I want to better understand
Yeah.
better.
So as of 12/31/22, forgetting what we're doing now, better understand the combination of the deposits. Checking, I think we had some money in the savings account, up to 500 based on what I'm seeing is FDIC insured, and then the balance is collateralized. So there is insurance on all, the entire deposit, but only 500,000 of which is FDIC insured. Did I explain that correctly?
So it's not covered in full.
It is
It
covered
is
in full. It's
covered.
covered in full by separate entities. The FDIC covering
government.
500,000 and the balance being covered by a third party. Collateralized.
Collateralization by the
Yeah.
bank.
One bank.
Okay, yes.
One, okay.
John.
Okay. You're good. So, just another thing on the financial statements, just real quick, the MD&A section in the front of the statements, which is management's discussion and analysis, so that provides,
Page.
this is starting on page 4 through 7. So this provides some additional information, some management's provided some additional information, some look at some variance analysis and that kind of thing. They provide a little bit more information about the statements that you're going to see in the financial statements further on in the statements. So there's a lot of good information in there, and it helps you just kind of get a feel for what you're going to be seeing in the statements themselves. I'm walking you through this executive summary because this really kind of focuses us on the balance sheet and income statement and provides some financial highlights that we want to talk about. Just a little easier, and then again, going through 30 pages of the financial statement. Lots of good information in there. I'm happy to answer any other questions about those. So if we go to the first page of the executive summary, the statement of net position, okay?
I'm
And,
sorry, what page?
The first
Next
statement
page.
you see in the executive summary.
In the small document.
In the small document, sorry.
But also it's on page 5 in the full big document, right?
It is page 8, I
Page
believe,
8,
is the closest. Right. Okay. So this provides comparative balances, but actually calculates some variances, so you can see some of the changes year to year, and what, what kind of, where you were last year compared to where you were at the end of this year. The big number here changing. Oh, that's okay. So the big change here, you can see right at the top is cash. The amount of fees you collected this year are much higher, and we'll go through that in just a little bit when we go through the income statement. So a lot more cash came in this year. Fee income receivable, so you just had some outstanding fees last year in December. This year we did look at your receivables. There were none for this year. Up in the, continuing the asset section, non-current assets, so there's a couple components here. Previously, this is just the property that the IDA holds, 52 acres, valued at $625,000, that you're holding for sale. There's been no activity on that, so that's consistent with last year. Well, the other balance is this, under the GASB standards, you're required to report the pension system, so your employees participate in the New York State pension system, and under the current GASB standards, how well the system is funded. You either have to report your share of the deficit, or in this case, the surplus this year in the system. So the system this year is reporting a surplus of $94,000, or I'm sorry, yes, $94,000, so that's included in this non-current amount. If you look down on the non-current liabilities for last year, that $500 is the liability for last year. Okay, and that's determined by an actuary that the system hires. KPMG does their audit, and they have an actuary that comes up with those numbers, so you don't have any control over the amounts or anything. They tell you what the numbers are. You put it on your balance sheet, income statement. I will tell you that's valued as of last March. So what's the stock market done since last March? So we'll see where that ends up.
I'm sorry, where's the 500,000?
I'm sorry?
Where's the 500,000?
The current liability is 500.
Oh, current liabilities?
That was 500.
So
Yeah,
there's-
just 500, so the 557, I think, is that the number?
You're looking at this one.
557. Oh, $557, yes, in the current liabilities for last year, for 2021. Right, so that switched from being a liability because the system last year was underfunded to a asset. And again, you have no control over that. You can't use that asset.
Yeah,
Coupled
that
with
one,
that, and there's a
sorry.
highlight section here, is the deferred inflows and outflows, which are another just auditing or accounting method there that those help you defer over time the big swings in the value of the plan. So rather than recognizing the change, the $90,000 change in 1 year, you recognize it over time, over 5 years. And those deferred inflows and outflows are just a mechanism to do that. You can see that the overall impact to your financial statements down here in the financial highlights is only $4,700, and but which is a $27,000 different or change from what that impact was last year. Okay, so you do have to recognize it does have an impact on your net asset balance, but not a significant one. Okay. Current liabilities, pretty close to year after year, but just to talk about some of the components in there. So you have your unpaid bills at the end of the year, some unpaid obligations, but you also have unearned revenues. So last year you collected some fees and had ahead of time of the projects being closed, so you didn't recognize $164,000. This year you recognize that balance, it came in, you don't have any additional unearned amounts recognized for project fees, but your accrued liabilities, so some pledged payments for some of your economic development projects, which we have listed here, MAP and YAMTEP and the Rochester Building and Construction Trades Council projects. So you've pledged some money to those and you have those outstanding. Okay, so even though the liability on here looks the same, there are some variances in it. But your overall increase in that position is $6.2 million. And we'll look at the statement of income and discuss how that came about. Do we have any other questions on the balance sheet while we're here? Which one?
Okay, keep going.
Okay. So we'll move on to the summarize the revenues, expenses, changes in that position. Okay. So this is the
That is
income.
page-
The following page.
Oh,
Exactly.
Still the summary.
Yep. And that would be
And
page
then-
9 of the financial statement.
9, okay, thank you.
Okay. So we have all our revenues brought up to the top in total here, so they include interest income, but and again, comparative amounts year to year. So we see a $4.9 million increase in fees this year. So you had a very good year, basically, but you had a couple of very large projects, Cycle for $4 million and Keeler Park for $1.5 million. In fact, I looked at the projects you had. 11-year projects make up $8 million of this balance. So some very large, very good projects closed this year. So very good year as far as getting those projects complete, which is great. Down in the expenses, so you've got some additional revenue. You able to complete some additional economic development programs this year. Additional $500,000 in program and community development. A lot of that due to, again, the MAP, YAMTEP, the RBCTC, and the Jazz Festival are kind of the biggest dollars there for the increase there. Last year you had disposal fixed assets. There was just some software that you determined you weren't going to use anymore. But overall, change in that position, $6.2 million increase. So you ended up with a net position of $15 million. So a very good year. You're in a very good financial position to continue on with your economic development activities and to continue on. So very good job this year.
How do we account for the dollars that are in the larger workforce development fund? Where do they, so I know we've reflected the dollars here for the first time in 2022, right? Or was it 2021? The monies that we had set aside for workforce
Yeah,
development,
so,
the
so.
new fund,
So we allocate them by,
as we get.
as we get them, but remember,
recipients,
we don't, they don't hit our income and, or our expense side until we incur those expenses.
Okay.
So we set aside the funds
And where are they sitting at that point?
in a bank account, okay? And then when we spend that, they hit our income statement as a,
Okay.
as a community development expense. Now, I would say as of, in 22, I think that number was about $400,000 or $500,000 that we had incurred in 22.
Right.
Of the
Mhm.
approximately 5.2 million that we have allocated to that fund.
Okay.
Okay, so that's why the balance that is sitting on our balance sheet is about 4.7 million.
I see. And you're okay with the way we're recording that?
Right. Yeah, so you would record your revenues and expenses as which is consistent with your policies. Any other questions on the income statement? Address those?
Is P-TAC just a pass-through?
It's a 60-80 split between COMIDA and the Department of Defense. I'm looking at Allison, because
I think it's at 75-25 now.
75-25.
The Department of Defense is 75-20. That's going to be more like 70-30, I don't know the exact one, but they pay more than we do.
yes.
So the net is what shows up in our statement?
Yeah, I would say that the general net effect that we contribute to the P-TAC program on behalf of COMIDA is about $92,000. That should be really the net effect.
Mhm.
It's hard to, and we've had this conversation before, there's a lot of timing things, that it doesn't
Mhm.
exactly work out to be a $92,000
Not bad,
expense
not
in a
bad.
given year, because
Right.
the Department of Defense contract, I believe they start on a 9/1. Right, so we start on 9/1 with the Department of Defense. Obviously, that only gives us 4 months in our current fiscal year, so the numbers don't exactly line up to 92. But if you just think about it, if everything else is equal, that is the COMIDA's contribution to the program.
Right.
On
I
an
think they're
annual basis.
changing their fiscal calendar.
They may be.
So Anna has let me know that they're gonna be making some adjustments, so you
Mhm.
might see some changes in the coming year. And it's been rebranded as the Apex Accelerator, so.
Oh, well,
it's
of
some-
course.
some
That
recent
sounds much
news.
better.
Yes.
Thanks for
Yes.
telling us about it. Okay, John.
So those are the financial statements. You do have a letter of communication. Again, that's a required communication under our auditing standards. Really just addresses some of the, what's going on with the audit. And there were no significant or material adjustments that were needed. There were no uncorrected misstatements that we were reporting, or disagreements with management. You did adopt the new lease standard this year, and we determined, we took a look at that and determined that there were no leases under the provisions of the standards. So you did that this year. Significant risks, there were no new significant risks other than the ones we were required to identify based on our professional standards, which is revenue recognition and the risk that there's management override. Doesn't mean that it happened, just means that that risk exists. And so it's a clean report, basically. There's no findings to communicate.
Well, congratulations to the team, our team, for keeping
Great job.
such great records and promptly working with our auditor team to make sure they had access to all of our information. So, the committee members have any other questions? Okay, so could we have staff leave the room? You could stay and Anna can stay. No offense. Okay, any questions that you had, John, about the audit?
No, again, like I say, I think think everything went very smoothly as we expected. We had actually met with Greg and his team ahead of the audit, and they had a planning meeting, which I think was very effective in helping us out, and working with Anna's staff, same thing. We came up with some scheduled dates of when we were going to work with people and that. And I think everything went very smoothly because of that. We were really happy with how things went. And again, no recommendations and no real weaknesses noted in the internal control structure, which is always a good thing. And so I think everything.
How does it work when we receive payments in cash? Who's handling that in our organization?
Allison handles that.
All of that.
Yes.
Okay. So it's not multiple people; it's one person.
The receipt of cash, yes,
Yes.
Allison.
Mhm.
Invoicing, Tara Speech prepares all invoices, and then we send them to Allison and Robin to verify that we've invoiced correctly, so we have a second check. And then once money is received, which is typically by check or wire transfer, Allison monitors that.
I see.
Is
Sounds
there
pretty
like,
good.
Allison and Robin are both involved in the process of looking at the invoice, looking at the money? They both sign
Allison-
off or sign?
No, just Allison signs
Yeah.
off on the invoice, and then before I release any legal documents, I either make sure they've received the check. Typically, Tara Speech receives the check, we make a copy and then remit to them, we don't cash it. And then if it's a wire transfer, I verify that it's been received before we release legal documents for reporting the benefits.
So just one more question, if we go forward with what we're thinking, what would, if we were to diversify some of where the money is going, do you see a substantial increase of your fees if we were to start diversifying some of the investments? Is that going to affect how you will bill, or is this going to be controlled and Bonadio monitor and you oversee? I want to know if there's going to be an increase if we get creative in our thought processes going forward, because we did mention that it could be cumbersome. But I guess, would there be a substantial increase in going forward, or is there going to be an issue where you would want to go back out and RFP or be concerned about it if we did something like that?
I mean, we would have to take a look at what you're doing as part of the audit. Typically, you're starting to invest in different securities, or not securities, but making different investments that may require different accounting wouldn't typically impact the fees with the audit unless there was something significantly different where we had to put a whole lot of additional time in for some reason. It's hard to kind of
No,
speak in
right,
abstract terms, but normally, so just to put a vanilla kind of thing out there, if you just started investing in U.S. Treasuries, which a lot of our municipalities we deal with do, or perhaps even you can invest in municipal bonds. You can't restrict it, unfortunately, because of general municipal law. If you invested in, like, say, municipal bonds, there'd be some additional accounting involved, but not necessarily enough that would create
Impact
the
audit
need for
fees,
an additional
yeah.
fee on the audit. I suppose if we had to evaluate the legality and a whole bunch of, I mean, it would depend on how much additional work. I mean, I don't necessarily perceive that there'd be an additional audit fee for something. Kind of hard to.
Well, we don't want.
The context is, right, like, we have some cash that we want to maybe put into
Diversify.
either different types of accounts and maybe different financial institutions, right? And we'll just, you can jump in here, like, that may take a few additional, we confirm the bank balances, right? So John sends out a confirmation from his team directly to the bank, and they confirm that. I don't think that's anything substantial time from that aspect. I would think there's a lot more internal accounting on our end to do that. And so, but I think from an audit perspective, like John said, see anything substantial that would require maybe John's team to rescope our fee at this point. But if there is, I mean, you know, fully, listen to that.
Thank you, thank you.
Okay, any other questions of John? Well, thank you, John. We like positive reports and great results, and we're glad
Nice
that
to be
that's
able
what
to-
you found, so.
Nice to be able to give positive reports, so very, very pleased with that.
Can we
Yeah,
let
pleased with how we-
Robin and Allison back in?
Well, while they're gone, let's talk wages.
Yeah, hours.
Right.
Our way, no.
Okay. All right, so we've reviewed the draft audit. Thank you very much, John. And now we've also sent to you the audit committee charter. And there are no proposed changes. And we also sent you a copy of the whistleblower policy. Also no changes. So we can approve those one at a time. Is there any questions on the our charter as a team? So can I have a motion to approve the charter? Been moved by Rhett, seconded by Troy. Any other comments, questions? All those in favor say aye. Opposed? Motion carries. Whistleblower policy. Any question on that? Okay, can I have a motion on that?
So moved.
Been moved by Rhett, seconded by
Second.
Troy. Any other edits, comments? All those in favor say aye.
Aye.
Opposed, motion carries. And next item is our discussion of the audit committee self-evaluation. Doesn't look like we have any real issues there. Looks like we're all of the same mind, that we're, fully aware of our policies and procedures and our actions. So, is there any other business to come before the audit committee? All right, I'll ask for a motion to adjourn.
So moved.
Been moved by Rhett.
Put yourself in there for adjournment.
Seconded. I'm not on the committee.
You're not on the
Oh, you're not
committee,
on the
so she can't do that.
I'm just a
All
relay.
right, second.
All right, seconded. All those in favor say aye. Opposed, motion carries.
Dinged me, and I was like, oh no, I better keep going, and then all of a sudden I'm like, it dinged me for 11:30 meeting. I was like, got here and I was like, you're not supposed to be there till
I
then,
can
that's
make up
okay.
for last time we were just running behind.
Yeah.
So are we? See, I got
Their work.
audit, okay.
Right.
All right. Okay, so I'll call the meeting to order for the Finance Committee, and I'll ask for approval of the minutes of the February 28th, 2023 meeting on page 2. Is there a motion?
I'll make a motion.
Been moved by Lisa, seconded by Rhett. Any additional comments, questions? All those in favor say aye.
Aye.
Opposed? Motion carries. Our fee schedule on page 3, there are no changes, right?
Not at this time. We are going to look at the fee schedule in greater detail as part of modernization, and we're hoping to do that mid-year.
Okay. Any other questions on that? Thank you. Do we need to, yes, we need to have a motion.
Yes, please.
To recommend that the full board re-adopt the fee schedule with no changes. Been moved by Rhett, seconded by
Didn't you say
Lisa.
we're gonna be able to change that you said would readdress that halfway through the year.
Yeah, we're gonna approve it for now and work with it, and then staff, we have some recommendations on some changes to the fee schedule potentially over mid-year.
So that we recognized in the motion, just to not pigeonhole us.
Motion to approve as it is.
As is
Now, it was just
with-
anecdotal
Yeah,
information,
okay,
yeah.
good. I'll second.
All those in favor say aye.
Aye.
Opposed, motion carries. Then, next item is our charter, the Finance Committee charter, with no changes.
Oh, shoot, no. Oh, no, yes, that's, sorry.
Oh, shoot.
No, no, ignore me.
Okay. Any questions on the charter? Okay, can I have a motion to readopt the Financial Committee charter with no changes? It's been moved by Lisa, seconded by Rhett. All those in favor say aye.
Aye.
Opposed, motion carries. The next item on our agenda is to review our policies and procedures. And the item in your packet on the investment and deposit policy, we're not recommending any changes, or we are recommending several changes. On page 6, okay, agencies funds shall seek to act responsibly as stewards instead of custodians. Is that-
Based on, I think Troy brought up a good point in our last finance committee meeting, that using the term custodian in that paragraph suggested a responsibility that was being placed upon committee members that we wanted to be clear was not. It is, the statement is where you are a steward of the public trust, that was what was intended, not a custodian of funds, or it had read custodian of the public trust. So we just changed it so that it didn't have that extra responsibility connotation that wasn't intended.
Okay.
So steward instead of fiduciary would be better?
So it's intended to be a fiduciary responsibility to the board of the public trust, not even the funds, just a steward of the public trust, or we had said a custodian of the public trust.
Right. No, that's good. Thank you for that.
You're welcome.
That's a big deal. But I'd like, the steward is more broad of a word to use there. That's gonna be the best way to label for, okay. Okay, thank you.
Okay, and the next proposed change is on, I guess it's page 2 of the charter, or 7 of our packet, anyway. You wanna talk about the designation of depository?
Sure. So you may recall last year, we inserted the sentence that deposits shall not exceed 15 million to any financial institution. I inserted the word single, so it's very clear that deposits to any single financial institution shall not exceed 15 million. And then based on our prior meeting, added a sentence that deposits in non-interest bearing accounts shall not exceed $1 million. The reason we've chosen 1 million is that expenses, we budget $2 million in expenses annually. We wanted to give ourselves 6 months of expenses in the checking account, because sometimes expenses are $400,000 to a contribution from the Workforce Development Fund.
Mhm.
So we wanted to be mindful that we're never having too insufficient of a balance in that checking account.
Any questions on that change?
Even with cash on hand, we couldn't put it in some kind of interest bearing that you still had liquidity, but my concern is, right now, you have a bank that has $1 million in a checking account. That person's not making any interest on that account, but the bank sure is at 4%, and then loaning it out at probably 7 to 9%. So the bank's making money. Can we not keep it liquid with the bank into a money market or something interest bearing, just so we could take that potential of our money going to work for the bank with no interest back at us?
I can say yes, but I'm not the person who's dealing with the money and, the expenses. Greg and Allison are. So I'll let you guys answer whether you think something less than $1 million would work based on the way our expenses come in.
Again, it's a big, it's just a lot more accounting of it, right? Like, 'cause Now we really have to look at cash on a more of a week to week. Like, hey, we're getting this money in, we're not getting this money in. The challenge for us with just $1 million is that, you know, we anticipate closings, right? We do our best to anticipate closings. Well, we know that sometimes, hey, this was supposed to close in June, and we're sitting here in September. And now we're gonna have to jump through a lot more hoops because we anticipated money coming in, and it's not because of, you know, variety of delays and things like that. Now we just have to, okay, go to the money market. Money market has a limitation on how many transactions you can have in a certain month, right? There's generally, let's call it 6 movements, right? So some limitations there. So we're trying to balance of, hey, is $1 million versus doing basically almost like, I would say it's gonna be like more like a weekly cash flow that we're gonna have to look at for an organization that is significantly has cash. Is it worth that extra movement?
Bang
I
for
would
the
say.
buck, bang for the buck, yeah.
Listen, you know, it's a good point. Like, my recommendation is we leave it at where it is. We will do our best to manage that to the best we can, and if we feel that we can,
Got a little latitude.
we got a
you
little
can change it.
latitude, and we're
Yeah.
gonna do that, and we have, we're getting this, and like, we're gonna try to do that. I just don't wanna get so boxed in here that we're going to be like, okay, hey, every week we gotta talk about what money's coming in and what money's going out. We're gonna be, you know, paralysis by analysis type of thing, right? So if we can agree to get to the $1 million and then do our best efforts to try to see how that goes, and if we think that we can do that, Troy, and based on what we have going on, you know, we'll do that. This year is also gonna be a little bit different because, again, we have $5 million that we have set aside for the modernization project. We've never really had that commitment. Where that falls, you know, in terms of what, you know, how that's gonna occur and the timing of that, I think is anybody's guess at this point. We're doing our best to kind of schedule that out. So you also have that factor in there. Like, we may get to the point where all these go at the same time, YAM, TAP, MAP, and all of a sudden we have to write checks for, you know, whatever, $800,000 that we weren't expecting in addition to our normal, and we're like, wow, we're cutting it a little thin here. Not that we don't have the money, it's just, now we gotta go get money, maybe we have to liquidate something, maybe we ran out of the number of transactions, or cash in a CD early, which if we decide to do that, we don't wanna do. My recommendation is leave it at the $1 million, and let's do our best job to maximize on what we're trying to do.
And the revisions reflect the committee recommendations from the February 28th meeting,
Mhm.
that the investment deposit policy be revised, and Greg's recommendations are also memorialized in the minutes from that committee meeting.
So, a couple of comments. So, I think that to have liquidity, it's a small price to pay, and it goes along with what you're saying, Greg. To have $1 million so that you can pay bills and cover, I mean, 6 months is a fair amount of time. So, I don't think there's anything wrong with that. My question is, you talk about some of the fees being paid out at the same time. Is there any way that we could coordinate how the money is invested and how, you know how they want it all up front? Is there any way that we could, I mean, it would be a discussion for another time, that we could coordinate how money goes out, maybe on a quarterly basis or twice a year, so that we could perhaps invest a little bit more of the money? Is that, you know, I'm just thinking out loud.
Most of our payments on our workforce development contracts do go out quarterly for the most part.
Okay.
So we have planned for that. But I think as we look at our portfolio as a whole and our assets and figure out investments and what makes sense, that's gonna be a factor of, we have to have money available quarterly. I think we're gonna have this committee meeting more often going forward, so we can, like Greg said, we're gonna use the $1 million benchmark, we're gonna observe what the ins and the outs are more closely, because we need to have an eye towards investment, and revisit the $1 million as needed and investments, but the short answer is we're gonna pull the committee together more often.
And that's a direct result of the February 28th meeting, Troy's comments. We're gonna pull the finance committee meetings together at perhaps monthly, more frequently.
Greg, I have a question for you. So in regards to the reporting and everything else, with inflation being like it is, and with CDs paying what they're paying now, 4.5% to 5% for a 3-month CD, is it less paperwork that needs, I mean, I talked to somebody else that manages a large municipality, and they use multiple banks, but they're only using CDs because the reporting is a little easier. Is that no difference?
I don't see a big difference between either a money, you know, you got checking, savings, money markets, CDs, treasuries, right? If those are what we consider our permitted investments, right?
Correct.
Like if we just kind of talk in those broad strokes, I don't see anything being so complicated that we couldn't, our reporting is gonna change significantly.
Okay.
So Anna, are you seeing, like, we mentioned MAPA, YTEP, we have those commitments. We know those dates, then they're kind of flexible for us, aren't they? Or we control when we
Yes,
can.
Yes.
So-
We can dictate the terms of
Right.
those contracts.
So to Rhett's point, putting something, kind of earmarked for this period of time makes us feel a little bit more,
In control.
comfortable, and, we can make money, but we can also spend the money, and we're being diligent about it. That's what's most, 1 million, okay, 10 million, 10% on 10 million.
Yeah.
We're not talking pennies here. We're talking that there is some, I don't feel diligent about letting what's, and it's a short period of time. I get it. I understand. I like the mechanisms that we've changed to give us more positivity, so it's good news. I appreciate the hard work that's been done to reconsider this. It's, you don't know how, it's a 100 pounds right here.
Well,
We
and
are- we're
they're
harder-
good problems to,
Yes,
like I said,
right,
they're
right.
good problems to have, like I said.
Right.
I don't think anyone,
It's
a
positive.
year ago today expected us to be maybe in the position that we're in, right? And even on the latest life cycle money that we received in late December.
Yeah.
Like, did we think we were gonna get it? We weren't really, like, again, so that really accelerated these conversations, because that came in maybe faster than we had thought, and now, it's $4 million or so, and you add that on to what we had, but you also have to take in the $5 million that we had allocated to the work, so
Yeah.
I think what we, have done over the last couple months have been really good conversations.
right.
Right.
Right, and a good plan moving forward.
And we're holding these organizations to much higher standards as we work with them to provide funds. Under my predecessor's leadership, there was no application form for an organization to come and approach us and ask for money. We're looking for leverage, we're looking for matching dollars. We're meeting with them frequently to make sure that they're meeting our expectations.
Yeah. And this is nothing in this room that had me concerned, and then magically karma last week, just what a slap in the face to just, something was talking from here, and it's nothing, no accusations at all. It was just a concern as a board member, that's all it was, and I just want to be clear if I came across a little
Quickly.
harsh.
So,
No, why don't use our powers for good?
So, to go along with what Troy's saying, we have an opportunity in the next couple of years. I think most people that are concerned with inflation, what comes with it are these higher interest rates, not gonna last forever. But I don't see inflation going away, so this is a great opportunity. If we're talking about putting that money, whether it's diversified or not, we're talking about additional fee income coming out of nowhere on $10 million. You're talking about $500,000 that can be earmarked for more workforce development. And, so I think we're in a great position, and it's not gonna last forever. It could last, if you look at what happened it may be before some people's time, but if you look back to when inflation raged from the mid-60s to the early 70s, when Volcker, said this is enough, the interest rates, I remember my grandparents saying, look at, and Kodak, Fund D was paying double digits, was paying 11, 12, 13, 14%. I don't think we're gonna see that, but what a change. Look at the low interest environment we've been in for decades now, since Volcker, that we've earned no interest. So now to be able to get safely 4.5%, 5% is it's a
Very
wonderful,
relevant,
is a
right.
wonderful thing
Yeah.
for what this board's looking to do, this committee does.
Okay, any other comments? All right, we need a motion then to recommend that the full board readopt the investment and deposit policy with the changes that have been discussed. Is there a motion?
Motion.
By Troy, seconded by Brett.
I knew that hand was going.
You weren't quite fast enough. Okay, all those in favor say aye.
Aye.
Opposed, motion carries. All right, we also have the Finance Committee self-evaluation results. Looks like we're doing a pretty good job there, pretty uniform in our thinking. And is there any other business that needs to come before our committee today? All right, I'll ask for a motion to adjourn. Been moved by Troy, seconded by Rhett. All those in favor say aye.
Aye.
Opposed, motion carries. So, we're adjourned.
Can you hear us, Joe?
Where are those teenagers?
Can you hear us, Joe? We can hear you.
We can hear you. Can you hear us? Okay.
We can't see you, but we can hear you.
You might want to move the palm tree to the left.
Yeah, well, that's first. Oops, sorry.
All right,
Oh, sorry, Jay.
no worries. All right, I will call the meeting to order, and I will ask for approval of our minutes from our February 7th meeting. Thank you, Joe. Second?
Second.
Thank you, Ann. All in favor? Aye. Okay, we have approved minutes. Our first order of business, well, in general, we're here, like the other committees, to review charters and mission statements and et cetera. So we've got a number of those to review. What I'm gonna do is just go through and say, okay, the first one is the mission statement. You know, I'll ask the committee members if you reviewed the mission statement and if you have any comments. So, see if there's any comments or concerns.
I don't have any.
Okay, hearing none, I will ask that we, for a motion to readopt the mission statement. Oh, we should also review the measurement report, which outlines the eye-popping numbers that we achieved in 2022. Any questions or comments? Robin, we have to approve the measurement report for, does that get filed somewhere?
Yes, it goes on, it's part of our parish report.
Okay. So this is part of what gets submitted, so. So I will,
Is that two
Any-
motions? or-
looks like it's one motion, or do I need a separate motion, Robin, for each one?
Well,
So I will ask for a motion to re-adopt the mission statement and adopt our 2022 measurement reports.
Move approval.
Thank you, Ann. Thank you, Joe, for this second. All in favor, say aye. Aye. All right. The next is to take a look at our bylaws. And we have some changes to our bylaws. Robin, you want to walk us through, or Rachel,
Sure.
walk us through those changes and maybe some color on why they're being made as well?
Absolutely.
Thank you.
So the first change is in Article 2, Section 3, which is on page 7 of your packet, plus page 3 of the bylaws. Yeah. The term of office, you'll see we've revised that. In 2016, we had revised the term of office to state that each director shall serve a term of 3 years and have a maximum number of terms of 2 consecutive terms. That was based on feedback from the prior administration in 2016. We've revised the language to the pre-2016 iteration of the bylaws. It is now consistent with exactly what the general municipal law says, which is that board members to IDAs are appointed by the legislature and serve at the pleasure of the legislature. So we wanted to make our bylaws consistent with law rather than more restrictive than the law. We've learned that it takes some time for vacancies alone to be filled by the ledge, so we don't want to set ourselves up to have a problem with with the ledge needing to deal with term limits and such. So we're turning over all discretion of appointments to the legislature.
So when we look at the term of office now, that was one of the changes right here on section 3, right?
Yes.
So right now, a director will serve until the appointment of their successor.
Yep.
What happens if somebody moves out of the area, can no longer serve in that capacity? What happens in cases like that?
So in that case, they would submit a resignation, and then we alert the clerk of the ledge that however the process goes, that we have a vacancy, and then they can make an appointment.
Okay, but we've had delays, and I'm asking, so there was an individual we had who moved out of Monroe County, and so could no longer serve. So in that case, if they're still a member,
Yeah.
because a qualified replacement hasn't been,
They've resigned.
they've resigned, but the way this reads, are they still an active board
Until the
member?
appointment.
Yes,
Until an
until there's-
appointment, so
yeah.
that's what I want to clarify. So if that person is still active, can they serve if they no longer meet, say they're no longer in the area or no
Yeah.
longer meet the qualifications, what happens there?
Well, so actually, living in the, we don't have any qualifications. Like residency isn't actually a qualification.
Okay.
We've treated it as one, and I think that's good practice, and we should continue to do that. But
So let's remove that. Let's say someone moves out of the area.
Somebody moves.
Yeah, and no longer can attend.
we would ask them to submit a resignation.
Right.
And then have an actual vacancy.
So.
And then the resignation's effective immediately.
Okay,
So
that's
that-
what I'm trying to get to,
Yeah,
because
okay.
as I read this right now, it says that they'll continue to serve until the appointment.
Right. And what I'm saying is resignation is completely separate.
Okay,
This doesn't contemplate resignation at all.
okay,
If you resign, you're done serving.
you're done
Submit-
serving.
Yep.
Okay,
Yep.
whether someone's been appointed or
Correct.
not.
You're done.
Yes.
You resign.
And the ledge can move to make
Yep.
appointments to the board and remove board members at their will,
Okay,
at their discretion.
okay.
Yeah.
I just wanted to,
Yes.
that's
No,
not the
good
way I
question.
read this.
No,
That's,
good question. Yeah,
You're
resignation
talking
is
about
separate.
section 4, the
Yeah,
resignation?
the resignation.
Yeah.
Where it says the acceptance of a resignation by the board shall not be necessary to make it effective, but no resignation shall discharge any accrued obligation or duty of a director.
Right, anything that's accrued.
You're
But
done, you're done.
future obligations and
Right.
obligations are just discharged.
Our problem in the past has been, we've lost several members for whatever reason, getting the legislature to picked up the ball and run with it.
Yes.
That's been where the delay is, and if it's not made a priority and we're not jumping them down and screaming,
I have a
they,
suggestion.
they are pretty lax about that, so we have to really lead the charge,
Agreed.
but it's the ledge that makes the decision.
Yeah, that's why I was trying to
Right,
get
right.
get a sense of how this would work.
So,
Good.
so now that we have a very active conduit to the ledge with Jackie, I think it's something that should be brought up to her, because why can't we have a pipeline even if the board is full? Why can't we have names of people that, you know,
Or be on the lookout for potential.
they may say no, but why not be proactive? It has nothing to do with what we're doing here, but it does, because there's delays.
And Jackie wanted to be here today, she couldn't make it,
Yeah.
but she'll be at next week's meeting. I think we should take her up on that,
Is
and
she gonna be in next week?
yes, she will be.
She'll be here probably for every meeting.
Yes,
Yeah.
she's going to be very active, which we view that as a very good thing.
That's helpful.
And she's smart, she asks great questions.
And she may have suggestions for us as to how we can, I mean, through her, and she's been with the ledge for, you know, for a while now, she may recommend some things, but I think that for her to come up with some names that would be, as she gets more comfortable with the board, I think that would be great. She's there with them.
Yeah, certainly.
And-
Some of the challenges with the legislature are expected to continue at least until November, and we're expecting perhaps some leadership changes.
Some miracles.
Yeah, I think I'm sensing cautious optimism from my colleagues in the county executive's office.
The, you know,
Legislature's a mess.
Red, I think it's a good idea.
I think Joe was trying to say something also.
Yeah, go ahead, Joe, I'm sorry.
So, I was gonna say, I agree with that totally. If somebody like only resign, what you don't wanna do is put ourselves in a position where we get a couple of people resigning at once, and then we can't function, we don't have enough people to vote.
Right.
Yeah.
Said, so Joe said,
I think less spot on, to get
A
people.
bunch of reservations at once.
Can we try? But at least you get people that are interested, and you kinda get them lined up.
Thank you, Al.
I think it makes sense.
No, I would agree with that. The other thing that I would ask we consider are, what are the skill sets we may be lacking on the board that we may want to have?
Yes.
You know, maybe someone in a manufacturing capacity, you know, just so we have, you know, we are represented across the broad range of industries as best we can that exist here in Monroe County.
And also financial background and whatever else we might be needing.
Jay, I guess, what if a board member wants to be proactive and verbally states, you know, in 6 months, 3 months, this moving on or moving out, or what would that be taken as a resignation, and then we'd, okay.
No, we definitely have those conversations, and if you think that you're looking at resigning in 3 to 6 months, or you're, retiring, to use a better word, board, then any recommendations for a replacement, we'd be happy to hear and put on the list. And we've always had a collaborative relationship with the appointing body, and have given our input at times when it's been asked for, so it'd be nice to have that information.
And the president of the ledge, if they're really involved, can play an active role in interviewing potential candidates, which is what we've done from time to time, depending on who is heading
It would be
the
nice to
county
have that,
legislature.
it would be nice to have that pipeline.
And then
ahead
you're
of time.
looking at, both parties and different backgrounds, but it's a joint effort to fill the vacancy. Jay, I'm sure you remember that.
Oh, no, yeah, and I mean, ideally, we would love to have those scenarios come to pass. It's, as was mentioned here earlier, what I think Joe mentioned it, what becomes problematic is when we have sudden resignations and all of a sudden, we start to teeter on quorums and our ability to function,
Right.
so.
I made a note, Brett, to follow up with, check in with the administration and with Legislator Smith at some point about that. That's a good suggestion.
We talk all the time, so.
Great.
Thank you.
Next
Rachel,
change.
yes.
Sure. The annual meeting, our bylaws state, will be held in March. I just wanted us to give us some flexibility that if we want to have the annual meeting in December or January, some other ideas do that our bylaws allow for that.
Okay. Any questions on that?
And then the last minor change to the bylaw is the order of business. It's an atypical provision to be in bylaws, so I left it in, but I wanted it to actually reflect what we do in the ordinary course of a meeting, and so that's all that is. It's our actual meeting order.
Okay. And those are the changes.
To the bylaws.
Any questions from the committee on that? If there are no questions or objections, I'll entertain a motion to re-adopt the bylaws with the changes that Rachel just outlined. Thank you, Joe.
Second.
Thank you, Ann. All in favor?
Aye.
Aye. Okay, we have re-adopted bylaws. The next is to re-adopt the governance committee charter without any changes. I will ask the committee if they have any questions on the charter or any concerns as the charter is currently written. Joe, Ann, you guys good with? Ann?
No changes.
Okay, if there are no changes recommended, I will entertain a motion to re-adopt our governance committee charter.
Move approval?
Thank you, Ann. Second? Thank you, Joe. All in favor?
Aye.
Okay, we've re-adopted our charter. The next item on our agenda is to review the self-evaluations. The first one is the governance committee self-evaluation. And in going through, I think we discussed one item where I feel like the governance committee or the board itself should be involved is the qualifications of new board members. Might be industry, might be that type of, that, obviously it's up to the legislature, but I think us being proactive and doing that, saying, hey, we would benefit from expertise in the following areas for consideration, I think that would be wise for us to do as
We should be a part of the process.
absolutely, Ann,
Mhm.
absolutely.
By point of comparison, your sister board, the Monroe County Industrial Development Corporation, does have some requirements in the bylaws to have certain number of, because it's a CDC, certain number of individuals who have a banking background, as well as someone who represents the workforce development field, so there's some precedent there.
Yeah, I don't think I want to go so far as to put that in the bylaws, but it is good, it is nice to have a diversity of experience. So, any questions, Joe, Ann, on the governance committee self-evaluations, or any of our extended colleagues here on the governance committee joining us here?
Looks very good.
All right. And we're going to move on to the board self-evaluations. Any thoughts or discussions?
The, let's see, 1, 2, 3, 4, 5, 6, down where we show two that are voted on as somewhat agree. And that's, the board meets to review and approve all documents and reports prior to public release. I don't know if we do or not. And is confident that the information being presented is accurate and complete. And so there's two of the four who voted in somewhat agree.
Is that done at the committee level? I thought that's what's going on here.
So each,
Like, not the whole board does it, but I
right,
think.
so governance committee reviews the evaluation of the entire board as well as the evaluation of the committee, and then finance, just the finance committee evaluation audit, just audit committee evaluation. So this reflects full board.
So I guess there's no discussion on that.
No, I mean, I think, so I guess coming through right here, we've basically gone through, we've readopted the mission statement, we've readopted bylaws with changes. So this is a board, not a governance committee, but the general board. So coming out of this, and maybe my memory is fuzzy, but we would present all of this information to the board,
We recommend to the board, right.
for review, so
So, yeah, so technically the motion should be motion to recommend the full board.
right, right. So we'll modify that retroactively, but I think trying to address Ann's point, I feel like that, like what does get released gets reviewed and approved at the committee level and then submitted to the board.
Board level, before any
Right.
other releases, right.
Where I think to somewhat agree is it can be overwhelming. And maybe not all the board members go through the detail
Their
that.
diligence,
Yeah,
right.
that happens at the committee level. But that's what I feel. So I feel like we are doing this, so when there's a somewhat agree, that's where it,
That's probably
where it stems from,
Yeah.
yes.
Mhm.
The one thing that I think bears watching is, and we've seen this before, is the question about our decisions being arrived with independent judgment and deliberation. This, occasionally this always pops up, and I think,
It's the same person, no.
not really confidential now. You have some insights,
No.
Chairman?
Just kidding.
So, I just think, the scores here don't indicate to me a problem, but it indicates that we should at least keep an eye on this. When we start to see in the somewhat disagree on something as sensitive as this.
There's also, the board knows the statutory obligations of the authority, and if the authority is in compliance with state law, and we're two on that who somewhat agree. Does that mean we need to do a little more education? Have education sessions for board
Could be.
members?
And that's understandable. I think that the laws governing IDAs, I know they change on an annual basis. Seems like there's an addition every year, so I think it's entirely fair that board members may somewhat agree that they have a grasp of what's changing. Sometimes I think I somewhat agree that.
I think these are always, the education is always beneficial, something we should consider maybe explicitly reviewing at our annual meeting, going through a couple of these.
Certainly. I think tying back to the comments about the somewhat disagree on, the item up closer to the top, we can go through the code of conduct and expectations and responsibilities at that annual meeting.
Yep.
Also, I see two somewhat disagree, next to the board exercises appropriate oversight of the CEO and other executive staff, including setting performance expectations and reviewing performance annually. I don't believe that the board does review my performance, and I would be open to that if it is of interest to the board and staff, setting some benchmarks.
You technically report to the deputy county executive,
Yes,
right?
ultimately to the county executive,
But ultimately,
deputy,
yeah.
and there is.
Is there a review process for you?
There is, yes,
Oh, good.
on the county side. I just meant as executive director of
Right,
COMIDA,
right,
if
right.
there are concerns there.
I think we should take that out. I don't know that this board is involved
Okay.
sufficiently in the day-to-day to provide any valuable
Okay.
you know, I view our objective, our mission as more about the projects that come before us, general direction. I think on the day-to-day, that resides exactly where it should. So I'd recommend we remove this question going
Oh,
forward.
this is the.
Or do we have to?
It's the Paris
I-
report.
I do approve her expenditures.
Okay.
That's right, that's right.
So the
there's,
question-
and that's a sort of an audit function to make sure that there is purview and oversight of the executive director in terms of spending and so on.
Sure. So these questions are generated by the state and they're what we plug into the Paris report ultimately? Or
We send this document to the ABL, we're required to.
So the questions are what they are. They apply to some agencies, they don't apply to all. So in our instance, you're correct in that Anna is the executive director, including Anna, has been the director of planning and economic development for the county. And within our own bylaws, this agency does have the ability to appoint a different director. We just don't do that. We've always appointed the director of planning and economic development. So if there were ever a day that I don't foresee on the horizon that you would have a separate executive director, then I think that question would be more relevant, but as it is now, I think it would apply.
Is there a column that can be added here for
NNA.
NNA? Exactly.
It comes from the
I know.
state, we answer it, it's okay, if we somewhat agree or we can even
Okay.
disagree, that's perfectly fine as well.
Yeah.
No one, I don't think we've ever gotten questions
No,
back
they
from
just
the
say thank
state.
you.
Okay.
It's just it's a good exercise in education and reminders to the board members of what we're doing on an annual basis, more than anything.
Okay. Thank you for bringing that up. Of course. Good discussion. Okay. So if there's no more comments, we'll move on to our second to last item, which is to review the plethora of policies and procedures.
I have a question on each one.
Please, I will turn,
Wow, there's
That's why he used the word plethora.
I will turn it over to my illustrious colleague.
Right, and she may be removed from the room.
While we grab lunch and get our pens out.
Sounds like a plan.
Joanne, are there any comments on any particular policy or procedures you want to review and discuss?
You know, I wanted to ask about conflict of interest, Jan. Conflict of interest policy. And I wanted to ask if you've gone through it and if you thought it covered what we needed to cover.
I'm sorry, say that again, Joe?
Conflict of interest.
Yeah. If we've gone through it and,
I want to ask Rachel really, when's the last time it was updated, Rachel? And do you think it's sufficient for what we have?
is there a particular area that concerns you, Joe?
So, not so much concerns me, Jay, I just want to make sure I understand. So, in other words, conflict of interest is for us sitting on the board. Right, Rachel, is that?
Conflict is for the board members.
Yes,
Right, it's for board members,
yes.
and it's, so, just for clarity, so if, first, we're not supposed to any, when we make a decision based off of what we're sitting there doing, it shouldn't be self-serving to us in any way, is that correct?
Correct. To avoid the impression of a conflict, yes, you should make sure that, you arrive at your decisions independently based upon materials provided to you by staff and of course whatever independent research to educate yourself. But yes, we want to avoid actual and perceived conflicts, which are two different things. So this policy was approved and adopted in March of '21. We didn't previously have a conflict of interest policy, we had a code of ethics policy only. They're meant to complement each other, so that's why, and it's a standard policy that we use for all of our clients.
And Rachel, that conflict of interest policy, what did you say it was put in?
We brought it in 2021.
Okay, and you did, Rachel, you went through it, you're comfortable with it?
Yes, this is the Harris Beach recommended policy.
Joe, are you good with it? Is there an area that,
No, I'm good with it. What I wanted to make sure, Jay, is it wasn't very, like, a really old policy and it didn't cover everything today. And
Okay.
I just wanted to make sure that I'm clear that us sitting on this board, we're supposed to be there for the good of the county residents, the taxpayers, and I just want to make sure it reflects that.
yeah,
Everything that I've read makes sense to me. Tell you the truth, this is the first time I went through our bylaws, I went through all of our bylaws, which I haven't done previously. Came on me for not doing that long ago,
But it's a
but,
good
I just want to make sure, I didn't know when it was installed, put in place, and I want to make sure that Rachel reviewed it and it still covers everything today.
yeah. No, and I think it's good because it's, as Rachel points out, it comments on both actual, which is fairly straightforward, but also perceived, which gets gray, but I think it's good that it's in there.
Yes.
Yeah, for sure.
Okay. Any others, Joe, Ann?
No.
Then I will entertain a motion to basically recommend full board approval of all of our policies and procedures with, there were some changes that,
Yes.
is there anything you want to point out to us in particular?
I can go through most of them very quickly. We might
Sure.
want to have a longer discussion about local labor.
Okay,
So the annual compliance review process and procedure, that's really a typo. There was just a missing word. I wouldn't worry about that. The housing policy, we did amend the definition of affordable. If you recall, the policy read that we would use 60% to 80% AMI if the project was in the city. If it was in the suburbs, we would use either that host municipality's AMI or the county, whichever was lower. As we've implemented the policy, we're using the HUD income and rent limits, and there's only one data set. There isn't AMI that they provide for the city, and then for each town, and then the county separately. It's Rochester, HUD, Metro. So we're using one data set.
and that is
every
more
month.
stringent, right?
Yes,
Yes, okay.
yes. So,
Rachel, can I interrupt you for a minute? And does it state in there that the 10% piece, so if someone's gonna come up to us with a multifamily development, 10% of it has to be for low income?
correct.
That's stated?
In our policy, yes.
Yeah, and Jay, that's something we talked about, maybe increasing, or starting at 10%, maybe moving to 20.
Yeah,
That's what we talked about when we implemented it last year. Is it something we want to talk about?
I don't think we've got enough data right now, Joe, to make that decision, but I think it's something we should put on the table to reevaluate next year. And
Makes sense.
and to take a look at the criteria and say, okay, has this been basically absorbed by the market without any issue? And should we look at going higher? But without the data, I don't think we're in a position to do that.
Yeah, just for the sake of conversation, I think if we did move it, I think you tier it. So if it's, maybe you say, okay, if it's above a certain amount of units, we go to 20%. Because at some point, somebody came in front of you with a large project and say, okay, 10% of it really becomes too small. So I just think we look at it from a tiered perspective, you know what I mean?
No, I do, and particularly with your background, I think that'd be real helpful to tap into that, because you understand the financials of these projects way more than the rest of us.
Very easy.
Can I weigh in?
Sure.
I think you should be cognizant of the governor's plan with these $800,000 homes and how they're going to put, better to your data point, there is gonna be some mechanisms put in place on, you know, what, with help, incentives, support as we build these projects, there are gonna be some tag-alongs with the construction side of it to have more people in the stew, if you will. At 80,000 homes per year, every year for 10 years, there is gonna probably be some regulation coming down parallel as these projects come out. And I know that it's a big concern of the, poverty, you know, so I think you're spot on, Joe, that I don't know if 20 is even gonna be something you're gonna be able to talk about. It might be something that's going to be regulated coming out of Albany. Just
Yeah.
put out there for conversation.
And if higher powers tell us we have to do something different, well,
Right.
we shall abide.
We'll do what we
Rachel
will.
will keep us honest, yeah.
Yes. Yeah. So, all right, Rachel?
Yes,
some-
the investment and deposit policy, the finance committee reviewed that this morning as well. We have made a couple changes. The first is to remove the use of the word custodian when referring to the committee members are custodians of the public trust. We thought that steward was a better word. It doesn't have this implication, steward doesn't have an implication that you are the custodian of something. Just a tweak there. The second thing was to limit deposits in non-interest bearing accounts. We had a healthy discussion on that at finance as well. The rationale is to limit deposits in non-interest bearing accounts to $1 million. That's 6 months of expenses. And we'll reevaluate that, and that committee intends to meet more often, so. That's the investment and deposit. I can keep going.
Hey, Rachel, let me ask you a question about that. So, why would we have $1 million in an account that's not an interest bearing account?
So,
Would it make more sense to say, look, let's, and this is food for thought.
yeah.
Would it make more sense to say, look, let's leave a couple $100,000 in that account, let's attach it to a savings account that is earning interest?
Yeah.
And then we can feed the money through as needed? It just makes no sense to me.
Yeah, I'll try
But
to.
it didn't, a year ago, it did that.
Mhm.
Right.
Right.
We like
Today,
Reagan.
you know, guys fundraise 400, and after tomorrow, maybe 475 basis points higher than it was a year ago. So now all of a sudden it matters.
Right. So we did talk about that. You asked a question that we talked about at finance. And ultimately, when we do have debits from our checking account, they are sizable because of the workforce development fund commitments. So they can be $400,000 of debits in a month. And we want to be careful to not overly limit ourselves and get the checking account too thin, so that we're constantly making adjustments, even on a weekly basis. And then are we bumping up against limits on withdrawals into a savings account and deposits? So we had this concern as well at finance, and we're gonna monitor the million and see if there's room to have it come down below. But for now, we'll give ourselves the room.
Makes sense. I would just be cognizant, you know, more now than ever. And
Yeah.
that situation's getting worse. Whatever that number is, if it's $1 million, that keeps you from moving money constantly. But even if you move money a couple times a month, I would, it's worth it. Because that interest that we're getting treated fairly by the bank, that interest is substantial.
Yep. Absolutely. Yeah, Troy raised the same, and we talked about that at finance. I absolutely agree. And we'll watch it.
Okay.
Okay, I'm gonna save local labor for the end. Save the best for last. The public comment period, we had, years ago when we were having some abuses of the public comment period, we had put in some language that people had to sign up 72 hours in advance. That falls on Saturday. So we're giving people until 5 o'clock the night before to sign up. We wanna give them, we're gonna have a public comment period, let people sign up to speak. So, that's.
We had
the-
some abuse.
Right, and we'll monitor if there's abuse. I think we'll handle it in other ways rather than
Right.
a 72-hour sign-up
Yeah.
period.
Something for consideration on that public policy to, or that, the public comment. I know, I was here and have the scars of those meetings as well. What I really feel we should do is prior, and I know this doesn't have to do with policy, but I think more on procedure. Before we go through any project, we should see if somebody wants to comment on that project and only on that project. The issue we had earlier on was people were
They could
coming
talk
in
about
and
anything.
pontificating.
Yeah, right.
And we should only allow public
I agree.
comments on matters before this committee. People should not be able to come in and
Yeah,
just,
we should have that in there.
and so
Filibuster.
Yeah.
filibusters, yeah, as an appropriate a term. So really it should be, before each project, does anyone have any comments on this project? And as chair, if people go off topic, I think you gavel them and say, that's off
Yeah,
topic.
perfect.
Is there a time limit in there too?
Yeah,
Okay.
it's 2 minutes.
But-
At Ledge, they have a little like noise that
Well,
they make.
we
when
used
you-
to.
We will,
Yeah.
We used to. In,
Oh,
in
okay.
in the event we have a lot of speakers, I'm sure we'll get the timer back out.
But that way, I also think it's the right thing before the committee votes. If anyone from the public has a comment on that project, it gives them an opportunity and us to consider it. The way we do it now, we do it afterwards.
It's in the
before.
It's in the
We
front of
moved
the
it.
agenda.
Oh, in the
now.
front of the
We
agenda.
did
Okay.
move it.
Yeah, it
reason.
used to be, right,
Yeah.
right, right.
Yeah, the
But-
moving
but,
to the
yeah.
end.
But I think if we do it by project, I think it's more timely, and it's just on that project, nothing else. Like, why would, in those instances, there were grievances that were aired, and that's really, we're not the forum for
Yeah,
that.
and we'll leave that entirely up to Anne of how she wants to conduct public comment. My objection is that we hold a public hearing and no one ever shows up to comment, and that is the time at which the public is supposed to come comment about the project. We generously offer a public comment period. We're not required to do so, and I don't know of another agency that at least I work with that does that. So we have it there in the top.
I support it. I think it's good.
Totally at the
Yeah.
discretion of the
As
chair.
long as it's kept to,
The
the
project that,
comments on the projects that are on our
Right.
agenda.
so for your consideration
Right.
as you move
Yeah,
forward.
no, that's fine.
All right.
We had some very entertaining interruptions
At
in the old days.
I may have used a different word, but yes, entertaining. Let's go with entertaining.
Very diplomatic at the end there. My first few meetings, we had public comments and then they kind of waved away and
Yeah.
then they were gone.
Yeah. It was interesting.
It was interesting, the few that I was able to see.
To take part.
Okay, transparency and accountability policy. We are now required, this is not a required policy, but it was a good place to plug in the requirement, as it turned out. We are required after our meeting to send all resolutions for benefits in excess of $100,000, which are most of our projects, to the affected taxing jurisdictions. So we send them a notice before the meeting that we're having a public hearing and we're considering this project, and then after the meeting, we have to send it as adopted resolutions out. The law went further to say that they want us to adopt a written procedure in sending resolutions out. So we plugged in a sentence into the transparency and accountability policy that states, in accordance with the law, we will send out as adopted resolutions to the affected taxing jurisdictions.
And the law was new as of January 2023.
Yes.
Okay.
Okay.
All right.
And without further ado, local labor.
Local labor. And I know this is still a work in progress, so.
Yes. And we can dedicate another meeting to it, but at least you'll have the most recent, revisions to it, reflecting the discussion of our last governance committee meeting. So, the red line is in your packet. If you have a numbered policy packet, it's on page 37. If you do not, it's kind of in the middle of the pack.
I can
Yeah,
pass
I
it
see
out
it.
if you want.
I see.
You found it?
Got it? So, the last meeting of the governance committee, we spent a lot of time talking about the warranty-related exception and what I would call two separate types of warranty-related exemptions. One, where the manufacturer says, we make the product, and we're going to install it.
Dictate who is going to work.
Yes. Another being, we make the product and we have approved installers that you have to use. And what we talk about is applying greater scrutiny when the manufacturer, the individuals tell us, we're approved installer for this product, whatever the product may be. And so what the policy now does in each exemption, starting with warranty, is calls out the required documentation that is needed, which for warranty, a copy of the warranty stating that it must be installed by the manufacturer, and then further, where the manufacturer requires installation by an approved third-party installer, we require information regarding the skills, certifications, and or training possessed by the third-party installer. And then we reserve the right to ask for more information, which will give us the opportunity to say, we have local people that possess those skills, certifications, or training to do this installation. Please go back to the manufacturer and push and see if we can get the locals to install it.
And we need to go one step beyond that. It's not only that we have the skills, but we have someone willing to go get certified as a third-party installer, because there is sometimes that certification. So if you, like Cisco has their approved, like you have to go and take a Cisco class to work on their projects or install their products. So that gives us the opportunity that, hey, you need to be approved by Cisco in their whatever, their approved installer, level 1 type of thing.
I think that
That's-
the
you're
concerns
good.
that we have around saying, and we're willing to listen, these are just our concerns as outsiders in the process of training labor, is it feasible to train labor in 45 days? And will that cause concern of project applicants to say, we've just put these folks through training and now we want them to come install this integral part of your project? Will that give people pause? And so we were thinking that we would start by saying we have people that possess the skills right now and can do the install, and perhaps hold on, we can get people trained, unless the committee feels very strongly that that can happen, and people won't be
Rachel, can I make
set back.
a suggestion? Can we approve, at least for the moment, let us not make changes to the local labor policy, because I still feel
Still
like
a work in progress.
this is a work in progress, exactly, so.
We'll take your feedback now and continue to work on it.
Yeah, your point is a good one, but I think what we should do is basically approve this as it is. At our next governance committee, maybe we can start with these red lines, go through them.
Sure.
And then make any other changes, and then recommend it at that time
So for
formally.
today, do you want me to just introduce the changes and then we can schedule another meeting where we go into the weeds on it?
So what we need to do then, right now, is I think, let us.
Re-adopt it.
As
As
is.
is,
As
without
is.
changes.
As is, and then we'll go ahead and, when we schedule our next governance committee, let's attach these recommendations.
Sure.
As a starting
Absolutely.
point.
I agree.
Good with that?
Can I add in on something
Makes sense, Jay.
that's fresh?
Sure.
Correct me if I'm wrong here. My understanding with Brian the Fountain, we had a manufacturer that was local, but their installers were not local.
Right. This is the power.
That really bums me out when I have a local manufacturer here receives incentives that won't allow training to be supplied by another entity to assist putting local labor on the project. That right there, it should be the driving force of the future conversation. A manufacturer in our backyard got a waiver. They weren't willing to train locally installers on their product that they manufacture here in town.
It bums me out too, Troy. I think what we have to look at and say, we can't get too far and say, why is that? What we can do is provide the backdrop to say, can we at least give our local labor an opportunity to get
To
that
bid
training?
on. the work.
It bums me out too, I
Well,
agree,
it is
but,
you know, you start off at 100,000 and then you add a zero the next time. And then the next time you add another zero. And when does it end? When we can put mechanisms in place pretty easily on this situation. This wasn't building a rocket ship.
no, I agree with you, and I think.
Epoxy floors.
And I think that's the intent and why I think we should,
Yeah.
you know, have this at our next governance committee meeting. But I think the philosophical goal is to give our local labor, who are as talented as anyone around the country, an opportunity to basically get the training or the certifications necessary to do that. That's what we want to do. We recognize that these certifications exist. They exist presumably because the manufacturers want to have some training done. It's just, we need to say, okay, if that indeed is the case, is someone here locally willing to do that?
To Rachel's point, can that be done within 45 days?
That's a,
That's where you have to.
So that's one consideration for next governance committee meeting.
It's a great point.
The practicality of that. The
and we're
other-
gonna have to balance
Yep.
between not slowing a project up and giving our local labor
Fair-
adequate time.
So in addition to that, would there be, would we be able to discuss at the next meeting questions that are asked regarding local labor up front? Is there, should there be changes in that to make it better for local labor?
Yeah, I think once we kind of get the policy down, then we can, yeah.
I think you're in your full right to ask a manufacturer that's in your backyard why the pushback on not wanting to hire local installers. That is our leverage. You know, and if they don't want it, we know why they don't want it, and we can all sit here but if they're gonna receive incentive, you will train locally the install crew for your product that's being built here. We know exactly what's going on, Jay. And
No,
if it's receiving an incentive, you know, they should be better explaining in the letter to Brian, why the refusal to not be willing to entertaining training local.
No, and I think I have mixed views on that, but let's put a pin in this, and, because otherwise we're gonna go down that rabbit
Yeah,
hole
yeah, yeah.
again. And,
But
which is
yeah,
a good
so-
rabbit hole to go down, because I think
So if you-
the discussions are,
If in the intervening time, everyone
Yeah.
can take a look at the line, we'll recirculate it once we have a meeting date, of course. I've highlighted something I'd like the committee to make sure to take a look at, which is whether the installation by the manufacturer itself should carry the apprenticeship requirement.
okay.
And my rationale being, does that really make sense? A manufacturer installing their own product,
That's a
does it
good
really make
question.
sense to put an apprentice on? If it's a third-party crew, I totally get it,
Yeah.
put the apprentice on. And then the rest of it is really just calling out the required documentation, and then the 45 days. That's a clock, and it starts when we have a complete submission. So just things highlighted for everyone to look at in advance of the next meeting.
For consideration, would you put pre-apprentice /
We have that,
apprentice?
yep. Pre-apprentice, apprentice, or local laborer to install. So we tried to cover the gamut. But if there's additional folks we should make sure to name, let us know. You're the expert.
Okay, so we're gonna keep the local labor policy as is pending our next meeting
Yes.
of the governance committee, and then we'll, okay.
There's no addressing specialty,
What's that?
not addressing specialty warranty separation.
So specialty and warranty are staying as separate reasons for exemptions in the draft, but the required documentation you'll see is very similar. With specialty, we want to know what skills, training, or certifications those individuals possess in this specialty construction that you're asserting doesn't exist locally, and we would like an opportunity to run down those skills locally. And you also you applicant for exemption need to demonstrate that you communicated what those skills are to the folks locally who could potentially do the install, and we want to see proof of that communication.
So should we consider helping Brian LaFountain
right now, Brian goes to you or Grant, or maybe sometimes no one at all, if he thinks it's cut and dry. So having a set group of resources that, as Rhett pointed out, doesn't change maybe as board members change, would be helpful, I think, to Brian, without speaking for him.
And this, Robin, I'll ask if we can, I know you guys have a busy March, but if we can, in the first half of April, maybe convene that governance committee, because this, I think we do want to do it sooner rather than later. So,
We'll look at, their spring break week is the first week, so
after that.
yeah.
Just
Yeah, I did.
FYI.
Just FYI. Some of us have plans.
All right. Very good. Anything else, Rachel?
That's it.
All right, so with that, I will ask for a motion to readopt these policies with the changes outlined by Rachel, save for the local labor, which we'll actually readopt as is, and make changes at the governance committee here in short order. Have a motion? Thank you, and seconded by Joe. All in favor? Aye? So that is unanimous as well. Is there any other business before the governance committee? I will entertain a motion to adjourn.
So moved.
Thank you.
Thank you very much.
We are adjourned.